For the average Russian, lower oil prices bring one hope: cheaper petrol. A few kopecks off the litre would make a big difference to people struggling with the high cost of living here. But Russia's leaders have cause for worry. Together with Saudi Arabia, Russia is one of the two biggest oil-producing countries in the world. When prices are high, times are good and the government is flush with cash. But prices have fallen, and so have revenues, and now there's a big hole in the country's accounts. Oil and gas make up nearly 50% of Russia's state revenues. To balance the budget this year, oil prices need to average $117 a barrel for the Brent crude grade. It's currently at $105 a barrel. Analysts say the drop is down to a combination of factors.
The main cause for weakness on the oil price is huge inventories, which are being built by both producing countries such as Saudi Arabia and Iran, and also by China. And secondly, because of demand concerns, because of European debt crisis.
The Kremlin is having to revise its growth figures for the year downwards from 3.7% to 3.4%. That's still pretty healthy compared to many of Europe's sickly economies. But Europe is the biggest market for Russian oil, and the effects of a Greek exit from the euro could hammer oil prices into the dirt. Vladimir Putin's campaign pledge of $153 billion in new spending is starting to look a little rash.
The government will have to limit the budget expansion, but that comes, I guess, in the aftermath of the election, when a lot of promises have been made, and not all of them need to be implemented.
With the clouds gathering, investors are already pulling their money out of Russia at an alarming rate. And as for the silver lining of cheaper petrol, well, Russians can't remember the last time they saw prices come down. Rory Challands, Jazeera, Moscow.